Hi traders, I'm Diana from Lith Investments. This week's Forex trade setup is the Australian dollar Swiss franc pair. Like the Aussie US dollar pair and the Aussie Japanese yen pair, the Aussie Swiss franc is a formidable carry trade investment. Like the New Zealand dollar, the Australian dollar closely follows commodity indexes, the gold index in particular, as the Australian economy is the third largest producer of gold in the world. Since the gold index is currently stalling, the rally in the Australian dollar is beginning to stall as well, which could mean it'll be several months before we see new highs in the long-term uptrend of the Australian dollar. Another bullish figure that could affect the Australian dollar is a central bank interest rate hike by the Bank of Australia, and I mean any interest rate hike. The Australian Central Bank interest rate currently sits at a multi-year high of 4.75%. As of this lesson, interest rates in Australia are the highest of any stable currency in the industrialized world, creating a significant demand from speculators looking to profit from the yield in Australian currency. And a couple more 0.25% rate hikes are expected this year. Last year, we saw several 0.25% hikes from the Bank of Australia, which led to incredible growth in the Australian dollar's strength. But carry trades do unravel eventually, just like the Aussie and Kiwi crashed in 2008. Although we don't know when the next one will be, it will likely happen when the Australian Central Bank decreases the interest rate of their currency. I recommend staying in the Australian dollar as a leveraged investment until any news of a possible interest rate decrease. In the foreign exchange market, there are several currencies to consider trading against the Australian dollar for a carry trade investment. For now, let's look at the Swiss franc. While Switzerland is not one of the major economies in the world, the country is known for its sound banking system and banking confidentiality when it comes to Swiss bank accounts. Combined with the fact that Switzerland remains neutral in times of war makes the Swiss franc a safe haven currency, which we'll define as one that attracts flows of capital in times of uncertainty. In the current markets, we're seeing many currencies experience moderate to severe inflation, while the Swiss franc is at all-time highs against the US dollar and several other currencies, and has been in a parabolic uptrend for months. Let's now take a quick look at the Australian dollar Swiss franc cross. Taking a look at the 4-hour chart, we see that the Aussie Swiss pair has been in a considerable downtrend over the past 2 months. Notice on the chart that the pair sits around 0.8836 with recent lows at 0.8760. I recommend taking a long position here as a long-term investment because this looks like a good opportunity for a few reasons. First, the reward to risk ratio is very good. Should the Swiss start to slow its gains, we could see a break above 90 in this pair. While on the downside, the pair would have to carve out new multi-month lows. Second, and most importantly, is the carry trade interest gains. This depends on your broker, but with FXCM, the returns from the Australian interest rate sits at around 88 cents per contract per day. This means every day you earn about 0.8 to 0.9 pips in interest just for holding your position in the Australian dollar Swiss franc pair. You'll notice even on low leverage, the gains from this interest rate far outperform. You'll notice even on low leverage, the gains from this interest rate far outperform stock dividend returns in the stock market. While you do risk the carry trade to unravel at some point, at least with the Swiss franc cross, that kind of breakdown won't hit as hard as, say, an Aussie US dollar carry trade. I recommend sitting on a small position in the Aussie Swiss and holding it. The pair looks to hold its ground at these recent lows and could turn out to be a profitable long-term investment. That's it for now. Good luck trading out there this week.